AMD Stock Analysis 2020. Welcome to my YouTube channel. AMD stock price soars to a new all-time high. So, is AMD stock a buy? Well, let's find it out. So right now, AMD processors is outperforming Intel processors. Intel loses its biggest customer, Apple, and somehow it won't produce its own chips anymore. So it's struggling all the time. It also cannot keep up the newest technology. Right now it's like 10 or 14 nanometers, and AMD right now has like 7 nanometers technology. So yeah, AMD, Intel, the competitor Intel, is not doing well right now. So let's have a closer look to the AMD company. Well, first of all, we will talk about AMD company first, and then we'll talk about its stock, and then a little bit about their financial situation. So let's get started. AMD was founded in 1969. So just a few quick facts about AMD first. And its headquarters is in Santa Clara, California. It is also one of the biggest chip maker in the world, besides of Intel and Taiwanese chip maker. And it has about 11,000 employees. The market share right now is like roughly 35%. And one of the reasons why AMD processors are doing so well right now, or their sales increases, because the processors, their products are doing pretty well. Here's a benchmark. So the update is like 31st July 2020, so the most updated one. And all the fastest processors are from AMD, and the next one is the competitor from Intel, but the processor cost is like $2,700, the price of it. And AMD's processor first of all is faster compared to the competitor Intel, and on top of that is also cheaper, like much cheaper. So when you go through this list, you can see AMD processors is topping Intel by far. That's why AMD sales could increase even during this time. Not even AMD processors, but like the new Sony PS5 is also using AMD processors. So one of the reasons why AMD is currently doing pretty well. Alright, next. Yep, stock. Alright, so let's have a quick look at the stock. The PE ratio is right now like 150, which means it's traded like 150 times its earnings. So you can say it's overvalued, it's too expensive, this stock. Right now the stock is traded at $78 US. So let's have a quick look at the competitor, how much their PE ratio is. Let's find it out. Their PE ratio, it's like 9. So you could argue that it is undervalued. So let's look it back. Considering that the AMD stock will continue its further growth, this PE ratio right now of 152 as of today, 31st July, it is, well, it's worth its price. Although the PE ratio is high, people still recommend to buy it. Alright, so as you can see today, it's doing well. 1 month ago, the stock price was, 1 week ago it was like $69. 1 month ago, yeah, it's like $52. So let's do the math really quick. $78 divided by 52, 50%. That's insane. So 1 month ago, if you buy it 1 month ago, your investment would increase 50%. 1 year ago, let's look at this one. The stock price was at about $29. That's quite something. So let's do the math here. 78 divided by 29. So it's almost triple its stock price within 1 year. So yeah, it's doing fairly super good. Yeah. Let's look further into the past. Like 5 years ago, the stock price was at $2. So, well, you would almost 40 times your investment if you invest in AMD like 5 years ago. That's amazing. Super good. Well, let's look further into their annual reports. It has like 96 pages, so it took me a while to find this page. So just smash the like button for me. So let's have a look here. So their earnings, well, their profit. Last year in 2019, they made a profit of about $341 million US. 2 years ago, they made a profit of $337 million US. So pretty decent in their most recent past, what they're doing. And they also reported their earnings report, second quarter 2020, which means for the month April, May, and June. So that 3 months, they could increase their sales, their revenue compared to last year. They could increase it to 26%, which is actually quite remarkable because with all this world crisis going on right now, they still could increase their sales. So yeah, they know what they're doing and they're doing it well. Besides, on top of that, they also could increase their gross margin to 44% from 41%. So they're doing fine, super good. And they also could increase their profit from 35 million last year to 157. So it's like roughly 4 times more. That's amazing.